Hello friends, in this video I am going to introduce you to the subject of cost and management accounting, and we will go through few basic terms used in the cost accounting. So the chapter's name is Cost and Management Accounting. We know that there are many subfields of accounting. Till now we have studied about financial accounting. Now we are going to study about cost accounting and management accounting. These two are subfields of accounting. So what is cost accounting and what is management accounting? Cost accounting, as the name suggests, is concerned with ascertainment of costs and recording all the costs that have been incurred in the production of a product or provision of any service. So, cost accounting is recording and ascertainment of costs for the purpose of cost control and reduction. So, what is management accounting? Financial accounting used to provide data to the end management, such as what was the position of the assets and liabilities as on a particular day, or what is the profit or loss of the company. But these figures alone cannot help the management in decision making. They might need other factors, other information, such as, say, how much of the total sales percentage is material cost. How have we done if we compare it to other entities in the same industry? What is the employee turnover? What is the inventory turnover? All these ratios, comparative statements, budgets, etc., helps the management in decision making, which financial reporting alone cannot provide the management. So, management accounting is a subfield which helps management by providing information for planning, organizing, controlling, etc. So let us look at the differences between cost accounting and management accounting. The first difference is the nature of information. So cost accounting is related to ascertaining how much cost or how much money we have spent in the production of a product. Say, for producing a product A, we have incurred raw material of 10,000 rupees, wages 20,000, and other miscellaneous expenses of 20,000. So the total cost is 50,000. This is what cost accounting helps us in ascertaining. So it records only quantitative data. Management accounting helps the management in a decision making process. For any decision, we need both the quantitative as well as the qualitative information. such as it helps to analyze what percentage of total sale is a material cost, how is the employee's turnover, idle time, labor, labor incentives, etc. All these quantitative aspects are also covered under management accounting. So, management accounting records is concerned with both quantitative and qualitative aspects. Number two, the recording of data. So, cost accounting records how much has already been spent in the production of a product. Say last year, we had spent 50,000 on the product. This will be recorded as a part of cost accounting. Say in the current year, due to inflation, the raw material cost has increased to 15,000, wages has been increased to 25,000, and miscellaneous expenses have increased to 25,000 as well. So, we will record the total expenditure of 65,000. Therefore, cost accounting records both past and the present figures. An important part of cost accounting is also variance analysis. Say, if we show the management that the current account figure is 65,000, then we compare it with the previous year to know how much is the increase in cost and what are the reasons for increase. Is it inflation? Is it inefficiency in the production process? Is it labor dissatisfaction, etc.? So we use both the past and the present figures to make decisions on the basis of the costing records. Management accounting is associated more with the future data. That is, the focus is on projection of figures for future. Basis the past data, management accounting seeks to predict what will be the performance of the entity in the coming year or what performance the entity seeks to achieve in the coming future. Next, rules. There is a whole body of ICWAI which governs the cost accounting. So, it has to follow certain principles and procedures recording costs of different products. As we will progress with the chapters, we'll see that there's different treatment of normal idle time and abnormal idle time, say fixed costs, variable costs. So there are certain rules and principles which are followed when we do cost accounting. Whereas in management accounting, there is no specific guidelines because every business is different. The decision made will be different basis on the experience and skills of the management. So, how the management interprets the given data is completely dependent on its own experience. Therefore, there are no set rules. The management can decide to take any course of action basis the information that has been provided to them. So, where cost accounting follows certain principles and procedures for recording costs of different products, management accounting doesn't follow any specific guidelines. It is up to the management to decide what course of action to take basis the given information. Next, area. Cost accounting is primarily concerned with cost ascertainment, that is, how much money we have spent in the production of any product or the provision of any service. So, cost accountancy only deals with cost ascertainment, whereas the scope of management accounting is much wider. It includes financial accounting, budgeting, taxation, planning, etc. The last difference is the objective. So, the objective of cost accounting is recording the cost of a product, whereas the objective of management accounting is providing information to the management for planning and coordination.